Hi, I'm Niall Paterson. Welcome back to the Sky News Daily. Lots to talk about today regarding the nation's finances and very specifically inflation. That, of course, being the measure by which goods, services become more expensive. Just how quickly things are costing you more. And certainly over the past couple of years, every single one of us has noticed that things have become rather more dear at the till. So with these figures out today, and indeed showing a slight rise in inflation, there are bound to be people being concerned. So let's try and perhaps allay some of those concerns. Joining us from our Westminster studio, our business correspondent Paul Kelso and our political correspondent Darren McCaffrey. Good to see you guys. Look, before we get into the detail, Paul, this figure comes out at 7 o'clock in the morning. Explain exactly how we get to this CPI figure today.
The Office for National Statistics conducts surveys and data collection around a vast amount of subjects and issues. Probably the most important one is its economic collection. They check the prices of stuff. They have baskets of goods. It's a metaphorical basket, but it includes a lot of the stuff you would put in your shopping basket, but it looks right across the board, all areas of the economy, goods, services. It looks at food, it looks at fuel, it looks at the cost of products for babies through to the price of steel and bricks and cement. And it uses that data, checks the same stuff every month to produce monthly, quarterly, annual updates that give us various measures of inflation. The one we focus on is consumer price inflation, and that's the figure we've had today.
Okay, Darren, give us the bad news then. How bad is inflation at the moment? I thought we got it under control.
Well, I was going to say that, first of all, I find it fascinating where they judge what products get to be the benchmark for this. I remember the devastating time which salad cream got taken off as an inflation figure, a reflection of its fall from British consumers' tastes. As a big salad cream fan myself, I was very devastated by it.
Dreadful.
So inflation is now at 2.2%, which is up, a little tick up on what we'd seen the previous month. In fact, the previous couple of months when it was at 2%. 2% is the Bank of England's target. So things have slightly gone in the wrong direction, but not by very much. And actually, inflation has bounced around a little bit, kind of month by month, even though the trend has been quite substantially downhill from a massive peak a couple of years ago. So it is a little bit concerning because it reminds us that inflation can be stubborn, but this is not kind of panic territory, if you like, for the governments.
Okay, Paul, so explain exactly why we have seen this slight and not necessarily worrying uptick.
It's a function largely of the energy price market, and even though energy prices have fallen, are continuing to fall, energy is forcing inflation up. They measure the same stuff every month and compare it to a year ago. A year ago, energy prices, the price cap in July, set by Ofgem, July 23, fell by £1,100, a little bit more. In the July just gone, the energy price cap also fell, but it only fell by £110, £115. So the decline in energy prices was 10 times less. That means when you do the sums, you actually have energy prices contributing upwards to inflation.
Ultimately, fundamentally, things are still getting more expensive, and they have been getting more expensive since, well, practically since time immemorial, it feels like.
Exactly, they do.
There are some things, though. There have been deflation on some things. When you look at, like, some supermarket products have fallen in price. I mean, they're up overall compared to a couple of years ago, but they've helped drag down inflation. But yeah, the overall point is it is called inflation, which means that, yes, they're not going up by quite as much as they used to, but they're still, on the whole, going up.
Yeah, the prices are still increasing. It's a measure of price rises, but the fact they are increasing at a more normal level at a time when wages are still actually above inflation, average wage increases. Again, people struggle to believe this, as we talked about it over the last year or two, that wages were rising. Because in real terms, with really high inflation, you weren't feeling that money in your pocket. Now they're above inflation. The real term wages are a little higher. That's much more manageable for people. And there is, I mean, just to get into a couple of the underlying trends here, you know, there's Fuel prices are much lower than they were. That's brought down transport costs. That feeds into the costs of everything else. Pretty much everything we buy and use gets transported by road. Services inflation and goods inflation are two ways that the data is sliced by the ONS. Goods inflation has actually been negative. It's still below zero, minus 0.6%. Services inflation, that's the majority of the British economy. That's been really stubbornly high, above 5%. And that's one of the things that's been holding the bank back as it considers rate cuts. It's fallen 5.2%, so it's coming down. That will be welcome. The one thing I think consumers will notice, food has been, there's huge food inflation. Actually, for the last 15 months, it's been falling. Well, this month, it's the first time in 15 months, food inflation has actually risen slightly. So that will be a concern. We've got to watch that because prices are much higher than they were. If they start to rise again, the cost of living squeeze will tighten a little more.
Let's take it away from the macroeconomics, the monetary policy committees and all that, and focus on, as you just mentioned, the consumers, the individuals, the people listening to this podcast who will see real life effect. I mean, ultimately, one of the most practical consequences of this is the link to train fares, isn't it? I mean, doesn't this mean that people are going to be paying even more on train journeys that are already, if you look across Europe, not necessarily the cheapest in the world?
The government traditionally uses another measure of inflation, retail price inflation, RPI, and it tends to use the number in July to inform the price of regulated tickets. And that includes season tickets that kick in January. And today that number was 3.6%. Now, it's not a hard and fast rule. The government doesn't have to do it. Recall a year ago when that number was much higher, there was uproar at the thought that prices for a train network that sometimes falls below the stellar standards we've come to expect. We'll have to see how that figure feeds through. As a bigger, the whole railway network's going to be transformed by Great British Rail, but whether that actually happens by next January, we'll have to wait and see. But this certainly does informs that there's a real world impact of the numbers spat out by the economy.
One of my greatest joys was during the general election campaign. I was following the Conservative Party around, and they would frequently book us on trains that invariably either were delayed or cancelled. And that was a sign of just how well the railway network were run, that the governing party were putting us on a rail network.
Laying on live metaphors for you,
yes,
as
wasn't
well
exactly
as transport.
working particularly well.
Or just trying to stop Darren McCaffrey from reporting on them. But
more than that.
There is another huge real-world consequence of all of this. Whenever we see inflation like this, we do talk about what the Bank of England is going to do, and all the speculation is that inflation creeping up means that we might see interest rates creeping down. I mean, first and foremost, do we think that's a likelihood?
Before this inflation figure came out, the markets were pricing in, it essentially comes down to a probability, a percentage of a cut or a hold. Before this, it was a 64% chance that rates would be held at the next meeting, which is in September. So with a third thinking there will be a cut. It's now 50-50. The market thinks there'll be a cut or a hold slightly. If there was a hold, it wouldn't be a surprise. We look further ahead, November and December, 90% chance of a cut is where the money is in November and 97% in December. So the markets think this is moving in the right direction. Mortgage rates have already been coming down. The market has become more competitive.
Wasn't there a bank yesterday that announced that they are already starting to do below 4%, I think, interest rates? So, we should also know, just on the inflation bit as well, that the suggestion was it was actually going to be 2.3%. So actually, the rise in inflation hasn't been quite as big as analysts thought beforehand as well, which I think bleeds into that.
It doesn't. The relief won't be instant, though. I mean, if you are remortgaging, if you're mortgaging for the first time or looking to remortgage, clearly this is good news. Lots of people, though, are locked in. There'll be people who have locked into higher rates in the last 6 months for whom this will be bittersweet. So while the pain took time to be felt, the relief will also be slow to feed through.
Okay, Darren, I don't know about you, but podcasts like this make my head hurt. Inflation kind of going up, that means interest rates coming down, which means good news for house owners. Anyway, park that for just 1 second. I presume on a day like today, we had the Chancellor of the Exchequer rushing to the studio to talk to us, to explain exactly what's going on with the economy. Or perhaps not.
No, with someone called Darren Jones. He is actually Chief Secretary to the Treasury. He's essentially Rachel Reeves' number 2. But yes, interestingly, and I think this is a sign of how significant politically this uptake inflation is, that we're not going to hear from the Chancellor today. We think she might be on holiday. We don't know for certain. And there are GDP figures out tomorrow, and she's not around to react to them either. So I think the very fact that she's not reacting to them is a little bit of a sign that the government don't politically think that this is a momentous moment, if you like.
But we know what she would be saying if she were in the studio. She would be banging on about, I believe, a black hole of £22 billion that she knew nothing about until she got into the Treasury.
Well, I mean, I might suggest there might be a bit of politics at play here. And, there's been definitely a concerted effort. And it's even in the statement today from the Treasury that the new government is under no illusion of the scale of the challenge they inherited. And actually, it's created a little bit of a political battle, if you like, in the sense the Conservative Party are pointing to these numbers where inflation's still relatively under control, that unemployment is actually down, wages are up. We're going to get the GDP figures tomorrow. They probably won't be that bad. That the economy overall is not necessarily in a bad state, and that Labour are just trying to give this impression that it's all terrible so that when things do improve, they can take the credit for it. That's not to say public finances are difficult. They definitely are pretty squeezed, but the Conservatives do also have a point in saying that, this idea that the Labour Party have inherited the worst economy ever is frankly just not true.
I have been struggling with this since day one, Paul. This reference to it as a black hole. The thing about black holes is they're black. The thing about space is it's black. Black holes are pretty difficult to spot if you look out into space. The £22 billion black hole, so to speak, in inverted commas, we all saw. We were talking about it. The newspapers, the broadcasters, the public were talking about it in the run into the general election. It is simply not feasible, not tenable in the long term, I should say, Paul, for Rachel Reeves to keep banging on that they didn't know how bad it was.
Yeah, I think ultimately this one comes down to, and I covered this when Rachel Reeves produced this rather odd, it was an odd document around the black hole. It depends how you define the black hole, and there's lots of politics in it. What we talked about before the election, the conspiracy of silence, as the IFS put it, and it was nobody was talking about the public spending, the public finance consequences of what had been baked into all the economic forecast, was baked into the budget of how much was available to spend on public services after this year. Simply not enough. It's unsustainable, and the budget will have to address that. The Fixing the Foundations document, to give it what the black hole document talked about was spending shortfalls in this financial year. Now, some of it we didn't know about. It was fair enough to say $6 and a bit billion overspend in the Home Office on hotel fees for migrants.
So it's a slightly bigger hole then?
It's a slightly bigger hole. I mean, who could have thought that overspending on hotels for migrants might be politically sensitive? But some of it is a clear political choice to an above inflation pay settlement for public sector workers. That's a choice, and it's not right to claim she'd only discovered that when she walked into the Treasury. She's made a choice. I think the broader point is one that Darren referred to, which is a distinction between the economic picture, which is brighter than it was. It's too early to say whether the sun is going to rise into cloudless skies, but it is brighter. And the state of the public finances, which, irrespective of who won the election, the same problem would be that you have a budget for the public sector over the next few years, which is simply unsustainable given the things we know about, NHS, defence, schools, and the things we don't. And the things we don't, of course, we've already seen start to impede the government's smooth progress in its first few weeks.
Guys, pause there for just a second. We will be back in a second, continuing to talk about the state of the nation's finances and the job that Labour's got ahead. Welcome back. Joining us still from our Westminster newsroom, our business correspondent Paul Kelso, our political correspondent Darren McCaffrey, and of course we're continuing to focus on those inflation figures out today, but the broader ramifications from them. All of this means that Rachel Reeves does have incredibly difficult decisions to make, as indeed some slightly better off pensioners have discovered when it's come to their winter fuel payments. But go through the papers on any day of the week at the moment and you are seeing stories left, right and centre being briefed out from government departments pointing at potential cuts to their budgets coming down the pipeline. I get that she's got a difficult job to do, but it's going to be made that much more difficult by people briefing the papers on a daily basis.
Well, indeed, but it's also made difficult by the fact that she's imposed lots of these rules on herself. I mean, this is a Labour Party that insisted it wasn't going to raise some of the big levers of taxation, if you like, during the election campaign. They've also got their kind of fiscal red lines in place as well, which means the wriggle room isn't there. And this is why the budget is going to be absolutely fascinating, because we're going to actually work out what the Labour Party, what the real priorities are, what they're prepared to do. We've seen today, actually, really interestingly, they have on public sector pay gone quite far, probably further than possibly they needed to. That was quite an interesting move. But yeah, there are going to have to be cuts to spending, I think, fundamentally, unless they're going to be enormous tax rises. Now, in part, Labour will always argue, and we're going to see this tomorrow with the GDP figures, but they're going to argue that the only way really out of this is growth. And that's fine. No one would disagree with that, but growth is not a tap. You can't just turn it on. It's something that takes a while to kind of crank up, if you can even do that. And so in the short term, yes, where are these tough decisions going to come? Let's be frank about this. What the Conservative Party have done, actually, protected certain kind of sectors, if you like, certain departments, health, I would have thought, being one of them, but they are going to have to fall somewhere. What happens in the run-up to a budget? Departments make it very clear they don't want it to be them. And that's why, if you are quite a canny political operator, you leak out the fact that cuts in your department has been looked at, hoping you create a furore, and then suddenly that decision actually is too difficult to deal with, so you have to look elsewhere.
It's also having an effect on the private sector as well. I mean, another story that was out this morning regarding AstraZeneca, the most valuable company listed on British markets. I think it's got a market cap of above 200 billion at the moment. So you'd think maybe not short of a bob or two, but they've got a new vaccine site that was supposed to be coming on stream. £450 million of their spending, £65 million of government spending. That government spending now being reduced to 20, putting the whole project at risk.
Yeah, and indeed, and I think there was a story yesterday about the supercomputer in Edinburgh and how much, again, government help it was potentially getting. And the strange thing then is, people would point out to AstraZeneca or some of those kind of key industries that are genuinely Britain's success stories that do help economic growth, is that, well, if they're not going to get the government aid to grow, how is the growth then going to come about? And so you end up in this kind of weird cycle. The government would also say it's just not sustainable, to carry on spending as they are, in the sense that fiscally things are quite tight. So it is incredibly tricky. I don't think anyone's going to sit here, even Rachel Reeves' worst enemy, and say, oh, well, this is all very obvious and straightforward. It clearly isn't. But fundamentally, I think what the government can't afford to do is to cut spending or to make really difficult fiscal decisions that actually in the end, in the long run, actually do more harm than they do short-term good.
But politically, how much longer can Rachel Reeves say, we didn't know, we had no idea it was this bad, oh my goodness, it's absolutely terrible, you wouldn't believe just how bad it is? I mean, can she do this, the 77 days till we're expecting that budget?
Yes, is the honest answer.
Oh, good.
So the reason I say that is because let's think back to 2010. Do you remember when Liam Byrne, he was the Chief Secretary?
The letter writer.
The letter writer, he wrote that letter saying there's no money left. And the Conservative Party were very, very clever and canny at kind of entrenching that into people's minds. To the point where there is an argument amongst, political observers who suggest that actually the first 100 days of that coalition government helped them win the 2015 election, which was 5 years later. And the reason is because it really entrenched in people's minds, rightly or wrongly, that Labour had mismanaged the economy, that they crashed it, that their economic incompetence had led to the world financial crisis, and that all that flowed from that, and that they had bankrupted the country, essentially. People do remember things. And what Rachel Reeves are trying to do this time, Neil, is that they're trying to entrench people's minds that, the economy is in a terrible state. I want to use an explicit word, but
good.
I won't. But they want to really, really remind people that things are terrible and that they're starting from the lowest possible base, so that any improvement in the months and years to come, Labour will get the benefit for. Now, the Conservatives are really frustrated by this because they argue, actually, things aren't really that bad. We didn't leave it in that bad a state. Just look at the macroeconomic figures. They're not looking that bad. But Labour really wants the public have this sense, whether it's in a month's time, 3 months' time, in a year's time, in 5 years' time, that they came in and really, really improved the economy. And that's what they're doing. This is the groundwork. This is what they're doing right now.
Darren McCaffrey, Paul Kelso, thanks very much indeed. And that's a lot for this edition of The Daily. We're back again tomorrow.